Well, okay, we're going to try this 10-minute postage stamp thing again. I've shaved, so I don't look quite as horrible as yesterday. So I wanted to make a little market review and just talk about it because there's a lot of amazing stuff going on. I'm actually going to start off with gold before we get to some of the equity stuff. This is the continuous contract of gold from about 1984 to present. And as you can see, we've got two major bullish bases in these decades of history. The most recent of which was followed by this smaller pattern, which importantly broke out on February 11, I believe. And then it was off to the races. And as my premium members know, I did a post for gold and platinum in the middle of the trading day. I felt that I used GLD, but this is same shape. I felt that this level was an important level of support because we had a big reversal in gold today. I mean, good Lord, today's range, the high was 1976.20, the low was 1880. So basically $100 range in gold. That is enormous. It's very rare, I think, that gold has anything like that sort of nominal range. But I felt that the support was very key. Anchored to this peak right here. So that value was 1879.50 and today's low was 1880.10, 60 pennies away. Pretty cool, huh? So I bought, as I said in the post, a ton of gold by way of GLD. I also got on my little bicycle and bought a ton of real gold to add to my stacks because I thought it was a good price. And even now, we have ascended. I'm looking over here. We have ascended off this line. So we bottomed at 1879.50. Right now we're at 1913. So not a bad little bounce. And forget the minute by minute stuff. To me, it's the big picture that really counts. I mean, looking ahead toward the real future. And listen. Let your imagination run wild with what could happen to this. So anyway, yay gold. All right. Well, let's look at some equity-ish type stuff. Looking at the ES, and the reason I called this swimming against the tide, and this theme is going to come up again and again and again, is that I think the bears own this market now. I mean, OWN, own the market. I mean it. The 13 years the bulls have been running with this thing are so over. What do we have on our side? Well, we've got a Fed which is helpless. They can't do anything. They cannot do anything because they're between the proverbial rock and a hard place. So the Fed is impotent. We have geopolitical mayhem going on. And in a weird way, we've got this bullish BTFD psyche just saturated into the public, which is going to be our ally every step of the way. I consider today's rally a wonderful gift, and every other rally a wonderful gift, just a short more. And I vastly prefer these sort of stair-step type thing instead of like some horrendous crash. Vastly prefer it. So I think the 99.9999999% people who don't know the first thing about bear markets and can only buy are our best friends. And they're going to be of great aid to moving money from their account to our account because they don't know what they're doing. So when I talk about swimming against the tide, we have counter trend rallies going up against enormous bearish patterns. As we look here at the ES, the topping pattern is this gargantuan thing here, this enormous pattern. And here we are pushing against it. How far do you think people are going to get into this thicket of overhead supply? They've kind of done it already. I mean, just look at the size of this thing. This is the top preceding the COVID. I mean, get out your magnifying glass. This little pipsqueak thing here, this whole thing is like not even as big as this left shoulder. So this is a honking big fella. on our side. And it also helps that the Fibonacci's are being interesting because it gives us some cool targets here, you know, like around 3,800 or so. And maybe even as low as this one, which corresponds to this trend line. So seeing a lot of that, the big patterns. Here's the NQ. In this instance, we actually got nicely below the January low today. And again, this is a monstrously big pattern. Oh, well, another bearish ally, by the way, is that the market's like overvalued to a degree that even I can't put into words. So yeah, fundamentals kind of help. RTY, look at this. Here's the Russell. Here's this long range. We went clicking down here. This was the magic day. This was Jan 18, where we brought into this new lower range. And we actually got a teeny bit below January's low today. But as you can see, we pushed back into it. But again, look at this. There ain't nothing holding this up. You know, cut below that low, and it's just whisper thin air. So that's kind of the big view by way of these equity futures. Let's just look at a few, as I like to do, I try to keep these under 10 minutes. Let's just look at a few key indices this evening. I'm recording this on Thursday evening, well after the market closes. Here's the Dow Jones Composite, another great example of swimming against the tide. In this instance, I'll change this to a candlestick. You can see we pretty much opened at the low and pretty much closed at the high. Look at that. Look at that beautiful bar. This is, and this line, I don't know precisely where to put this line. I mean, we can be brats and put it at today's high, just as a guess, but I don't know exactly where it belongs, but something close to that. And you can see we're mushed right up against that huge topping pattern. The Comp Q, that is the NASDAQ composite. You zoom in here. Here again, let's talk mushing. There's this trend line. Look what we did. Open at the low, push all the way up. Look where we ended. Right at the trend line. And I'm so glad I got out of my big puts lickety split this morning. So another ally is deep paranoia brought on by these past 13 years. I would also, since we're in NASDAQ land, mention the SOX. I added this new channel just now. This is the semiconductor index, the SOX. I've got puts on NVIDIA and an AMD, and I think semiconductors are going to be helpful on the bear case. But look what happened today. Here's the channel, and we were above it for this chunk. This is kind of the outlier here, but here's the channel that envelops most of the past year of trading. And what did today's rally do? It opened a little below the channel, went blasting higher, and just got right up to the midline, just about. So my expectation, it's not required, my expectation is that Friday will be a down day. I did lighten up. I've got a lot of cash to deploy. And, you know, but yeah, I've got a feeling that Friday could be a down day. And I've also got a feeling we have not reached the bottom anywhere close. But it was a tremendous day. I mean, Tesla was in the 600s and went up to the 800s today. Over $100 range in Tesla alone. Anything else worth sharing as we earned our 10th minute now? Not especially. So anyway, I'll just sum up by saying that as I stand here now, I've got 28 bearish option positions, none of which expire earlier than I think May 14, whatever the May something, middle of May. So months, those are the really close ones, the May ones. I've got Junes and Julys, and so there's tons of time to go lower. So I've got 28 of those, and I've got 8 nice simple equity shorts in my personal account. So anyway, terrific day, terrific week, and let's have a good Friday too. See ya.